just asking broadly when it comes to the outlook and the level of demand that you're seeing from clients.
Well, I think Xero continues to see very nice and strong demand across the markets in which we play. As you know, Australia, New Zealand, the UK, the US, Canada, Singapore, South Africa. And I think it's because of what we do, which is, we're a tool to help you get online as a small business and get your finances sorted, which we think serves you well in good times and certainly also in uncertain times.
A lot of these markets are facing some challenges, though. QuickBooks Online in the US, for example, is making very fast strides. What's your strategy to catch up?
Well, interestingly, I think we enjoy the benefit around the world, including in the US, of having really loved software that has two channels, both the direct channel and accountant and bookkeeping channel. And in the US specifically, while we're smaller than QuickBooks, I think the accountants and bookkeepers we work with really appreciate that we run an open ecosystem, as do the small businesses we serve. You can hook us up to Gusto, you can hook us up to Melio, you can hook us up to Bill.com. And if you know anything about the US, it's a mix and match fintech ecosystem. So our positioning is one that's quite open relative to other competitors.
Are you concerned about revenue per user being low compared to QuickBooks Online in the US? Is there a strategy to try and close that gap?
Well, interestingly, around the world, we have said our strategy is a dual strategy. Number one, to keep growing subscribers. Number two, to deepen our penetration and usage of our products. And so I think we have noted to the market that, while Xero has historically grown subscribers at a very fast rate, over the last few years, we're starting to increasingly focus on growing ARPU, as you noted. Now, that's a function of what products and services you offer, like payroll and payments, as an example, as adjacent jobs to bookkeeping or bill pay. But it is also a function of just deepening and changing our product mix and making sure that customers know that we have a variety of SKUs that they can use. So certainly we're on a journey to increase ARPU, but not taking our foot off the gas on subscriber demand either.
And then in markets like Australia and New Zealand, we're obviously looking at pretty good levels of penetration already. So what's your strategy there in terms of taking it to the next step?
Well, I think you've noted that despite both these markets, Australia and New Zealand, having quite deep penetration, we continue to see strong subscriber growth. But as we think about growing Xero into the future, we talk a lot about what we call, growing those super jobs, making sure that we have, all the things we need in our payroll product, starting to extend our products, like adding time and attendance scheduling as an example. So in markets that are very well penetrated, while we continue to grow the core, we also keep adding new jobs. We recently announced, for example, a partnership with Deputy, the leading time and attendance solution in Australia, to in fact extend our functionality further and serve not just the subscribers we have, but to keep growing our TAM in those markets.
What's your confidence level when it comes to investment and hiring at the moment? Are you looking at making more hires?
I think we have been on a journey at Xero, which is, I'd say, to balance high growth with profitability. And as you know, this past year, not only did we return to profitability, we reported, on 22% top line growth, we reported EBITDA of almost $500 million, or over $500 million, and a 75% rise. So I think when we look at our outlook, I would say measured hiring. We think a lot about deploying our capital in line with our 3-year strategy, which we shared with the market just in February. And I think our belief is that we want to be kind of controlled and smart allocators of our capital while we continue to add headcount.
Sukhinder, your background has impressive levels of corporate activity, of M&A activity. So do we take away from that in terms of what the plans are for M&A or potentially even a sale? What's your sort of goal in this role?
So I think at Xero, our goal and my goal is to grow our footprint and our impact for small businesses. And I think we have always been programmatic acquirers. If you look in our history, a lot of our Australia functionality was in fact built through acquisitions. And in recent years, we've continued that trend. So I certainly would expect, as we are now profitable and obviously growing our cash flow as well, we just recently refinanced our convertible note, that we do see programmatic M&A as a way to keep growing Xero's footprint. We're focused on growing our impact and see systemic M&A as a way to do that.